But when it breaks, because the investors have been so thoroughly inculcated through our government, central bank and treasury, that they will ride to the rescue. So there's a lack of fear in the market. Everybody just says, hey, just buy stocks because the government, don't you know, if the stock market stumbles, the government will come and save you. But what if the stock market starts to fall? And this is crucial. If you don't remember anything else about this interview, remember this. When the credit markets falter and long-term interest rates begin to spike, the Pavlovian response normally to be, let's borrow trillions of dollars. The automatic stabilizers happen automatically, and then you could have some helicopter money too, like we had post-COVID. What if they borrow multiple trillions of dollars and the Fed prints it, and instead of that placating or mollifying the situation, it exacerbates the situation, and long-term interest rates begin to spike inexorably, intractably. That's the real problem this time. So we could end up with a crisis for sure. Business cycle hasn't been repealed. And when government reacts, does their reaction function make the problem worse? And if that's the case, and I'm not saying it's 100%, guaranteed to happen. I'm saying the likelihood now that we have entered insolvency with $2 trillion deficits. And I think that we are now $38 trillion in debt. We started the year at 30. I think we started the year at 36. So, I mean, we truly have a big problem with our fiscal situation. We have a huge problem with inflation. We have a huge a monetary problem. As a matter of fact, he had Governor Moran said at this last FOMC press conference that he wants to cut more. For 2 times he voted to cut by 50 basis points. Okay, this is beyond foolish and ridiculous. Is now a time where you want to panic? So the Fed has missed its target for 4.5 years, this 2% inflation target for 4.5 years. And now you want to panic cutting interest rates? So it's a very likely situation that the next crisis will bring so much debt and so much money printing that long-term yields do not fall, they rise, and that destroys, mortgages are backed, are priced off of the 10-year. So the housing market gets destroyed, student loans, some auto loans, corporate debt is priced off that long end. So you could have a meltdown in asset prices that is not remediated by the traditional borrow and spend methodology in DC.
But then would the Fed just not come in and basically buy all the debt similar to what Japan did? And as you said, that's probably potentially lead to inflation. It could potentially lead to other issues. But then, and I think that's the issue, is sort of people realize that there's no way out of this, so that they're going to do that. And then the only options are really, precious metals, golds, and potentially actual assets to protect your wealth.